Hey guys, it's Amphyfx here. I'm going to be showing you a simple strategy using other blocks. Now, it's so simple that a 5-year-old can grab so easily. It includes three things: market structure, imbalance, and other blocks. Now, without further ado, let's dive in. I'm going to be teaching you step by step how you can apply it. Now, what are other blocks? They are they are like points of interest where markets make big moves. They make big moves, indicating the presence of market makers in the market. Now, market always retrace back to these levels before reversing. You make money by looking for confirmations at these other blocks. Now, other blocks are more of like bases or area points of interest where you see market make a huge move before reversing back to that same level and continue to move towards the words our predicted direction. Now, let me show you how you can find these other blocks. Now, first thing first, go to your higher time frame. That's your time frame of analysis to know the market structure, like what's going on in the market. So now obviously you can see markets making series of just by looking, you know, this market obviously is a bullish trend going upward like this. It's a bullish trend. This is what a bullish market making series of higher highs, breaking structure to the upside. You can see break of structure, 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 and then market creating what a resistance level around this area. So there is what liquidity above this level. Now if you see market making like breaking structure to the upside, you know definitely this is a bullish trend. So what do? You look for your other blocks. You look for area where markets break structures. So around level, like around the area where market breaks structure to the upside or to the downside, that's where you're going to look for your other block. Now if you look here, you look for an area where markets make what a big move, an impulsive move, and then highlight what our other block from this area. Now if you observe here is what our other block. Why market make this big move, this impulsive move you're seeing, this move? You can see market created a gap around that area. You can see there's a gap between that area. Then the candlestick before that move is what is our other block. So and what do you see market did? Market came back and tapped into that level before it continues to push to the upside. That's how to identify that block. Another example is this one here, this one here. You can see market came there. What happens? Market came there. No, this one, I'll take this one. That one is already mitigated. Now this one is not mitigated. And what happened? Market created what a fair value gap. This gap you're seeing here, and this gap you're seeing. Market created a gap, and obviously there's a fair value gap there, but market didn't tap into our other blocks. So in some cases market may not tap into your other blocks, but it may tap into the fair value gap. So traders trading the fair value gaps will want to make money around this area now, because market didn't come back to our other block. Now another example for this one, now see market break structure to the upside. Our other block will be this one you're seeing, this one. And what do you see happen? Market came back to that level, tap into it before it begins to buy. So that's how to identify other blocks. So guys, now let's move on to the topic of the day. We've like market structure, we've break down market structure. Market structure is all about higher highs, higher lows, like identifying a trend. Is it an uptrend? Is it a downtrend? Or is it ranging? Now this is an uptrend. In a downtrend, you see something like market doing something like this. Breaking structures to the downside. So this is a downtrend. Whereas in the ranging market, you see you're doing something like this, moving between support and resistance. So this is a ranging market. You have no business with ranging markets. You're only concerned with what? You're only concerned with either a downtrend or an uptrend. So that's that to how to identify another block. The next thing you should do is what? Look for your recent order block. Our recent order block. Let's say we are analyzing from here. From here. Now my recent order block here will be from here, right? Be from here. What will I do? Now we have only one order block, and that's that tiny red candle you are seeing is our order block. I will mark it out. Then I'll go down to my 2-hour time frame. So I think that's the only other block for now that broke structure to the upside on 4-hour time frame. Now we don't have anyone on 2-hour time frame. Still, like we have one here, but this one already has like engulfed it already, so there's no use for it. Now after that, we move on to what? We wait for the market to tap into this our demand zone. This our order block, that's our demand zone. When market taps into it, we then move on to lower time frame. Look for a structure like this. Then what? Market will begin to buy. Now since market have tapped into the zone, I'll move on to my entry time frame. That's my 15-minute. On 15 minutes, I'll wait for market to break structure. That's change of character. Now you can see the trend is an uptrend, but if you observe this structure, we're having a downtrend movement. Markets making series of what? Lower low, lower highs, lower low, lower low, lower high, lower low, just like that to the downside. So we are temporary, like the market went into a temporary downtrend, and then what are we waiting for? Wait for a confirmation for market to break a structure. That's the last structure. If market is able to break above this, then I'll look for my what? I'll look for my entry. I'll wait for market to, I'll look for my other block on my lower time frame. So my other block on my lower time frame will be this block, but obviously the market didn't come up to that same level, so I may not have got into a trade from there. But market eventually tap into my other block all the way from here, like this level, and is what begin like is now like going back towards our direction. So I'll have gotten my entry around this area. When market tap into this, I then get my entry from here, set my stop loss just below the other block, then targets this level. So I'll have a good risk to reward ratio. That will be about 1 to 4 risk to reward ratio. So guys, that's that. The strategy is very simple, even make you a whole lot of money in the market if you know how to use it. If you enjoyed this video, don't forget to subscribe, like, and leave a comment in the comment section what video you want me to like make in the future. Thank you guys, thanks for watching.